Welcome back to the deep dive. Today, we're going to really dig deep into Stellantis by looking closely at their 2023 annual report.
Yeah, it's a really interesting one.
It is, and I know a lot of you listening are probably interested in this one because Stellantis,
Yeah.
it's this massive global automaker.
It is. And you know what's cool about this report is it's like a window into how they're thinking about the future of the industry, like how they're dealing with all this disruption and change, with electric vehicles and all that.
Yeah, exactly. So let's not waste any time. Let's jump right in.
Sounds good.
So first things first, Stellantis, it's not just one giant car company, right? They've got all these different brands under their umbrella.
That's right.
And they've actually organized them into 6 different business segments. We've got North America, enlarged Europe, Middle East and Africa, South America, China and India and Asia Pacific, and then the luxury brand Maserati.
Right. And each of those segments faces its own unique set of challenges and opportunities.
Absolutely.
With America, for instance.
Yeah.
They're really strong in trucks and SUVs,
Big profit center for them, right?
Exactly. Cash cows. But they're also under a lot of pressure to electrify their lineup.
Yeah. Every automaker is feeling that pressure these days.
Then you've got enlarged Europe, which is actually further ahead in the EV game than you might think.
Interesting.
And then China, of course, is this massive market.
Huge
growth potential, but it's also incredibly competitive.
Yeah, and speaking of China, one thing that really jumped out at me in this report was their asset-light approach there, particularly with their Jeep brand.
Oh, yeah.
Instead of going all in building factories, they're partnering up with local companies.
Right. It's a much more cautious approach.
Yeah, it seems like a pretty smart move considering how tricky that market can be.
Absolutely. It limits their risk and gives them more flexibility. They're testing the waters without jumping in head first.
Okay, so we've gotten a sense of their global footprint.
Okay.
Yeah, let's talk numbers.
Let's do it.
Because this report is packed with financial highlights. First up, net revenues. They're up in 2023.
Good.
Which is always good to see. The report says this is due to increased vehicle sales strategic pricing and a favorable mix of vehicles selling well. Of course, we always have to remember those buyback commitments and currency exchange rates. Those things always have an impact.
Always do.
But overall, a solid performance.
Definitely.
Now let's talk about their adjusted operating income, because that tells us how profitable their core operations are.
Right.
And here again, they're seeing a solid performance, particularly in enlarged Europe.
Which makes sense considering their strong market share there.
Now, one number that really jumped out at me was their research and development spending.
Oh, yeah.
They plowed a whopping $5.6 billion into R&D in 2023.
That's a lot of money.
It is. It shows how serious they are about innovation and staying ahead of the curve, especially in areas like electric vehicles and software.
And, that's essential in this industry. It's changing so fast you have to innovate or die.
Absolutely. All right, now let's move on to a metric that I know a lot of investors are interested in, industrial free cash flow.
All right, yeah, that's basically the cash they have left over after paying for all the essentials, like factories and equipment.
Exactly.
It's a really important measure of financial health, and it tells us a lot about their ability to generate cash from their operations.
And what does their industrial free cash flow look like?
It's pretty healthy, actually. They generated $10.1 billion in 2023, which is, a decent amount of cash to play with.
Okay, so they're making money, they're investing in the future, and they've got cash coming in the door. What's not to like?
Right. Well, there are always challenges and risks. We'll get to those. But from a purely financial perspective, they're in a pretty solid position.
All right, now let's talk about the part that I know a lot of you are waiting for. How is Stellantis creating value for their shareholders?
That's the bottom line, right?
Exactly. And the answer is in 2 main ways: dividends and share buybacks.
Dividends are those regular payments that companies make to their shareholders.
All right, like a little thank you for investing in us.
And share buybacks are when a company buys back its own shares from the market.
Which can boost the value of the remaining shares.
Exactly.
Yeah.
So in 2023, Stellantis paid out a total of $4 billion in dividends and spent another $1.5 billion on share buybacks.
Those are some pretty big numbers. It
Yeah.
shows they're committed to returning value to their shareholders.
It does, but as always, we need to look beyond the headlines and ask some tough questions.
Yeah. Are these payouts sustainable? Are they sacrificing future growth for short-term gains?
Those are the key questions, and to answer them, we need to dig deeper into their business segments, their growth strategies, the risks they face, and how they're managing this whole transition to electric vehicles.
All right, well, let's take a closer look at their North American operations, because as we mentioned, that's a huge market for them.
It is, and it's also a market that's undergoing some major changes.
Yeah, with the rise of electric vehicles and all the competition.
That's right.
So what are some of the key trends we're seeing in the North American market? And how is Stellantis responding to those trends?
Well, the biggest trend, of course, is the shift towards electric vehicles. Even in America, where gas guzzlers have ruled the roads for decades, people are starting to embrace EVs.
Yeah, you can see it everywhere.
Right, and Stellantis recognizes this. They're not burying their heads in the sand.
They've actually set some pretty ambitious goals in their Dare Forward 2030 plan.
Yeah, that's their roadmap to the future.
Exactly. They want 50% of their U.S. sales to be electric by 2030. And they're aiming for carbon neutrality by 2038.
It's a bold plan, but the question is, can they actually pull it off?
Yeah, that's what we're here to figure out.
Exactly.
So let's talk about what they're doing in North America specifically to achieve those goals.
Well, first of all, they're investing heavily in new electric models.
Like what?
Well, we've already seen the Jeep Wrangler 4xe plug-in hybrid, which has been a big hit.
I've heard good things about that one.
Yeah, and they're also launching a whole bunch of new EVs across their various brands, including the Ram 1500 REV, which is their first all-electric pickup truck.
That's going to be a big one.
Yeah, the pickup truck market is huge in America, so if they can crack that with an electric truck, they'll be in good shape.
But it's not just about launching new models, right? They also need to convince people to actually buy them.
Right, and that's not always easy. People are creatures of habit, and they can be resistant to change.
Especially when it comes to something as big as their car.
Exactly.
So how are they addressing that challenge?
Well, they're doing a lot of marketing and education to try and raise awareness about the benefits of EVs.
Like what?
Well, they're talking about the environmental benefits, of course, the fuel savings, the performance, the technology, all that stuff.
And they're probably also working on building out the charging infrastructure, right? Because that's a big concern for a lot of people.
Absolutely. They're partnering with companies to install more charging stations across the country.
Okay, so they're investing in new models, they're educating consumers, and they're building out the infrastructure. What else are they doing?
Well, they're also trying to make their EVs more affordable.
That's a big one.
Yeah, because right now EVs are still more expensive than comparable gas-powered cars.
Yeah, that's a barrier for a lot of people.
It is. So they're working on bringing those costs down through economies of scale and technological advancements.
Okay, so they're really pulling out all the stops to make this EV transition work.
They have to. It's the future of the industry.
But they're not just focused on EVs, right? They still have a huge business selling gas-powered cars.
Right. They can't just abandon that overnight.
So how are they managing that balance?
It's a tough balancing act. They need to keep investing in their existing lineup of gas-powered cars to keep those sales going.
Yeah, they need that cash flow to fund the EV transition.
Exactly. But at the same time, they can't fall behind in the EV race.
It's like they're walking a tightrope.
It is, and it's going to be interesting to see how they manage it.
Okay, so we've talked about the North American market, which is obviously crucial for Stellantis, but they're a global company.
Right.
So let's broaden our perspective and talk about some of the other regions where they operate.
Yeah. Sounds good.
Let's start with enlarged Europe, because that's another big market for them.
It is, and it's a very different market from North America.
How so?
Well, for one thing, European consumers are generally more open to smaller cars and fuel-efficient vehicles.
Right, gas is much more expensive over there.
Exactly. And they're also more environmentally conscious.
Yeah, Europe has been a leader in promoting clean energy and reducing emissions.
So all of that creates a different dynamic in the European market.
And how is Stellantis adapting to that?
Well, they have a strong lineup of brands that are well-suited to the European market.
Like what?
Well, they've got Peugeot, Citroën, Opel, Fiat, Alfa Romeo. You know, those brands have a long history in Europe.
Yeah, they're household names over there.
And they're known for their fuel efficiency, their stylish designs, and their overall value.
Okay, so they've got the right brands for the market, but what about EVs?
They're doing a lot in the EV space in Europe, too. They've set a goal of having 100% of their European passenger car sales be electric by 2030.
Wow, that's even more ambitious than their U.S. goal.
It is, and they're already making progress towards that goal.
What are they doing specifically?
Well, they're launching a whole slew of new electric models across their various brands.
Can you give me some examples?
Sure. They've got the Peugeot E208, the Opel Corsa, the Fiat 500, the Citroën EC4, a whole bunch of them.
And they're all fully electric.
Yes, they are. And they're getting good reviews.
That's great to hear.
Yeah.
But what about the charging infrastructure in Europe? Is it as developed as it is in the U.S.?
It's getting there. It's not quite as widespread as in the U.S., but it's rapidly improving.
Okay, so it sounds like Stellantis is well-positioned in the European market.
They are. They've got the right brands, they're making the right moves in the EV space, and they're benefiting from a favorable regulatory environment.
All right, now let's shift gears and talk about a region that's a little bit further afield, the Middle East and Africa.
Okay, that's a very diverse region with a lot of different markets and consumer preferences.
Absolutely. So how is Stellantis approaching that region?
Well, they're taking a very localized approach. They're recognizing that what works in one country might not work in another.
Right. They can't just apply one-size-fits-all strategy.
Exactly. So they're tailoring their product offerings, their marketing campaigns, and their distribution networks to meet the specific needs of each market.
Can you give me an example of that?
Sure. In some countries, they're focusing on fuel-efficient vehicles because gas is expensive. In other countries, they're emphasizing SUVs and pickup trucks because those are popular.
Right. And what about EVs?
The EV market is still very small in the Middle East and Africa, but it's starting to grow.
Okay, so they're keeping an eye on that, but they're not making any big bets on it just yet.
Right. They're taking a more wait-and-see approach.
All right, now let's move on to another important region, South America.
Okay, South America is a very important market for Stellantis, particularly Brazil.
Yeah, they have a long history there.
They do, and they have a very strong market share.
What are some of the key trends in the South American market?
Well, one big trend is the rising popularity of compact SUVs and crossovers.
Those are popular everywhere these days.
They are. They're versatile, fuel efficient, and they can handle a variety of road conditions.
Yeah, they're like the Swiss Army knives of vehicles.
And Stellantis has a number of strong offerings in that segment.
Like what?
Well, they've got the Fiat Pulse, the Jeep Renegade, the Citroen C4 Cactus, a whole bunch of them.
And what about EVs?
The EV market in South America is still very small, but it's starting to grow.
Is Stellantis doing anything in that space?
They are. They're starting to introduce hybrid models, and they're investing in charging infrastructure.
Okay, so they're getting ready for the EV wave, but they're not rushing into it.
Right. They're taking a more measured approach.
Right, now let's talk about the giants in the room, China and India and Asia Pacific.
Okay, those are massive markets with huge potential, but they're also incredibly challenging for foreign automakers.
Why is that?
Well, they have their own unique regulations, consumer preferences, and competitive landscapes.
Yeah, it's not easy to crack those markets.
It's not.
So how is Stellantis approaching those markets?
Well, in China, they're taking a very cautious approach.
We talked about their asset-light strategy earlier.
Right. They're not trying to conquer the market all at once.
Instead, they're focusing on specific segments and partnering with local companies.
Exactly. They're trying to learn the market and build their presence gradually.
And what about India?
India is another tough market, but it's also a very exciting market.
It's one of the fastest growing automotive markets in the world.
It is.
Yeah.
And Stellantis is focusing on expanding their presence there.
With which brands?
Primarily Jeep and Citroen.
And how are they approaching the Indian market?
They're emphasizing local production to make their vehicles more affordable.
That makes sense.
And they're also focusing on fuel-efficient models, because that's a big concern for Indian consumers.
Okay, so they're really tailoring their approach to each market.
They have to, if they want to be successful globally.
Now let's wrap up our regional overview by talking about Maserati, the luxury brand in the Stellantis family.
Ah, Maserati, the Italian stallion.
What's their strategy?
They're all about performance, luxury, and exclusivity.
They're targeting a very specific niche of customers.
Exactly. They're not trying to be everything to everyone.
They're focused on building high-performance sports cars, luxurious SUVs, and grand tourers that appeal to a global audience.
And they're even dipping their toes into the EV market.
With their new electric Gran Turismo.
Exactly. They're trying to stay ahead of the curve while still staying true to their brand heritage.
So it sounds like Maserati's doing well.
They are. They're a profitable brand, and they add a lot of prestige to the Stellantis portfolio.
All right, so we've covered a lot of ground in this first part of our deep dive. We've talked about Stellantis' global footprint, their 6 business segments, and some of the key trends and challenges they're facing in each region.
And we've only just scratched the surface.
Exactly. There's still a lot more to explore.
There is.
In the next part of our deep dive, we're going to dig into the heart of the matter.
Oh, yeah.
The financial engine that drives this global giant.
We're going to look at their income statement, their balance sheet, their cash flow statement, their free cash flow, and all the juicy details that tell us how healthy this company really is.
And we're going to analyze how they're creating value for their shareholders through those dividends and share buybacks.
We're going to get into the nitty-gritty, the numbers, the strategies, the risks, the opportunities, the whole 9 yards.
Buckle up because it's going to be a wild ride.
I can't wait.
So we dug into those numbers, and it looks like Stellantis had a pretty good year financially.
Yeah, their revenues were up, their profits were healthy, they're generating a decent amount of cash flow.
Yeah, they seem to be doing a lot of things right, but as you always say, numbers only tell part of the story.
Exactly what we really want to know is how are they planning to keep this momentum going? How are they going to create value for shareholders moving forward?
Yeah, because it's not just about returning cash to shareholders through dividends and buybacks, right?
Right. It's about making strategic decisions that will drive future growth and profitability.
Okay, so how is Stellantis planning to do that? What's their game plan?
Well, their big bet is on electrification.
Yeah, we talked about their Dare Forward 2030 plan in the last part.
Exactly. That's their roadmap to the future.
Okay, so remind us what's in that plan.
Well, it's all about becoming a leader in electric vehicles. They want 50% of their U.S. sales to be electric by 2030 and 100% of their European passenger car sales to be electric by then.
Wow, that's ambitious.
It is, and they're aiming for carbon neutrality by 2038.
So they're really going all in on EVs.
They are. They have to. It's the future of the industry.
But it's not just about setting goals, right? It's about actually executing on those goals.
Exactly, and that's where things get really interesting.
So let's talk about how they're actually making this happen.
Yeah.
How are they going to achieve those ambitious targets?
Well, the first thing they're doing is investing heavily in research and development.
We saw that they spent 5.6 billion euros on R&D in 2023.
Yeah, that's a huge investment, and it shows how serious they are about innovation.
Okay, so where's all that money going?
It's going into developing new EV platforms, new battery technologies, new software systems, everything they need to build the next generation of electric vehicles.
And they're not just doing it all in-house, right?
Right. They're also forming strategic partnerships with other companies.
Like who?
Well, they've partnered with LG Energy Solution to build battery gigafactories in North America and Europe.
Okay, so they're securing their supply of batteries.
Exactly. And they've also acquired Emotive, which is a company that specializes in autonomous driving software.
So they're bringing in outside expertise to help them accelerate their development efforts.
Exactly. They're not trying to reinvent the wheel. They're partnering with the best in the business.
Okay, so they're investing heavily, they're forming partnerships. What else are they doing?
Well, they're also streamlining their operations.
How so?
Well, they're consolidating their manufacturing footprint. They're reducing the number of platforms they use. They're simplifying their supply chain.
So they're trying to become more efficient.
Exactly. They're trying to do more with less.
Okay, so that all sounds pretty good, but what are the challenges?
Yeah.
What are the risks that could derail their plans?
Well, the biggest challenge, of course, is the sheer cost of this transition.
Yeah, EVs are expensive to develop and produce.
They are, and the battery technology is still very expensive.
Plus, they need to build out all that charging infrastructure.
Exactly. So the upfront costs are huge.
And there's the competition.
Oh, yeah, the competition is fierce.
They're up against all the other major automakers who are also investing heavily in EVs.
Right, and they're also up against Tesla, which is still the EV leader.
Yeah, Tesla has a huge head start.
They do, and they're not standing still. They're continuing to innovate and expand.
So Stellantis has its work cut out for it.
They do. They need to be smart, they need to be aggressive, and they need to be lucky.
Okay, so those are some of the external challenges, but what about internal challenges? What are some of the things that could trip them up from within?
Well, one challenge is that they're a very large and complex organization.
Yeah, they have a lot of moving parts.
They do, and it can be difficult to get everyone on the same page and moving in the same direction.
Yeah, they need to make sure that all their different brands and divisions are aligned with their overall strategy.
Exactly, and they also need to avoid getting bogged down in bureaucracy.
Yeah, they need to be nimble and adaptable to keep up with the pace of change in the industry.
Another challenge is that they're relying heavily on partners.
Yeah, we talked about their partnerships with LG Energy Solution and Emotive.
Right, and those partnerships are important, but they also come with risks.
How so?
Well, what if those partners don't deliver? What if they run into problems?
Yeah, that could really set them back.
It could. So they need to make sure they have strong partnerships with reliable companies.
Okay, so those are some of the challenges, but let's not forget about the opportunities.
Right. There are also some huge opportunities for Stellantis.
Like what?
Well, the global demand for EVs is expected to explode in the coming years.
Yeah, everyone's talking about the EV revolution.
Exactly. And if Stellantis can position itself as a leader in this space, they could reap huge rewards.
Yeah, they could grab a big chunk of that growing market.
And they're also well-positioned to benefit from the growth of connected car technologies.
What are those?
Basically, it's all about connecting cars to the internet and to each other.
So like having Wi-Fi in your car and being able to access apps and services.
Right, and also being able to communicate with other cars and with infrastructure like traffic lights and road signs.
Okay, so how does that create opportunities for Stellantis?
Well, it opens up a whole new world of possibilities for them. They can sell data services, they can offer subscription-based features, they can develop new safety and convenience features.
So it's a whole new revenue stream for them.
Exactly, and it's a rapidly growing market.
Okay, so lots of challenges, lots of opportunities. It's going to be interesting to see how it all plays out.
This is a really exciting time to be watching the automotive industry. It's undergoing a massive transformation, and Stellantis is right in the middle of it all.
Now, before we move on to the next part of our deep dive, I want to circle back to something we talked about earlier, those shareholder payouts, the dividends, and the share buybacks.
Right, because those are a big part of how Stellantis is creating value for its shareholders.
Exactly. So let's take a closer look at those payouts and see if they're really as good as they seem.
All right, sounds good.
So first up, dividends.
Dividends are those regular cash payments that companies make to their shareholders.
Right, and they're typically paid out of the company's profits.
Exactly. So the bigger the profits, the bigger the dividends.
Now, in 2023, Stellantis paid out a total of 4 billion euros in dividends.
That's a pretty sizable chunk of change.
It is, and it represents a dividend yield of around 7%.
Which is pretty attractive compared to other investments.
Yeah, you'd be hard-pressed to find a savings account that pays that much interest.
Exactly. So for investors who are looking for income, dividends can be a great way to generate cash flow.
Okay, so that all sounds pretty good. But here's the big question. Are those dividends sustainable?
That's the million-dollar question.
Yeah.
Because if the company can't keep paying those dividends, it could really hurt their share price.
Yeah, investors will lose confidence and start selling their shares.
Exactly. So we need to look at a few things to assess the sustainability of those dividends.
Okay, like what?
Well, first, we need to look at the company's payout ratio.
What's that?
It's basically the percentage of their profits that they're paying out as dividends.
Okay, so the higher the payout ratio, the less money they have left over to reinvest in the business.
Right. So a high payout ratio can be a red flag.
What's considered a healthy payout ratio?
It depends on the industry, but generally speaking, a payout ratio of less than 50% is considered sustainable.
Okay, so how does Stellantis' payout ratio stack up?
Their payout ratio in 2023 was around 45%.
Okay, so that's below that 50% threshold.
It is, which is a good sign.
But it's still pretty high.
It is, so we need to keep an eye on it.
Okay, what else do we need to look at?
We also need to look at the company's free cash flow.
We talked about that earlier. It's basically the cash they have left over after paying for all the essentials.
Right, and it's a good indicator of their ability to generate cash from their operations.
So how does Stellantis' free cash flow look?
It's pretty healthy. They generated over 10 billion euros in free cash flow in 2023.
Okay, so that's another good sign.
It is, because it means they have plenty of cash to cover those dividend payments.
Okay, so based on their payout ratio and their free cash flow, it seems like those dividends are sustainable for now.
Yeah, I'd say so, but we need to keep monitoring the situation.
Okay, now let's talk about share buybacks.
Share buybacks are when a company buys back its own shares from the open market.
Right, and that reduces the number of outstanding shares.
Exactly, which can boost the value of the remaining shares.
Because each share represents a bigger slice of the pie.
Right.
Now, in 2023, Stellantis spent 1.5 billion euros on share buybacks.
That's a significant amount of money.
It is, and it shows that they're committed to returning value to their shareholders.
But as with dividends, we need to ask ourselves, are those buybacks sustainable?
Yeah, because if they're spending all their cash on buybacks, they might not have enough left over to invest in the business.
Exactly. So we need to look at their free cash flow again.
Right, and we saw that they generated over 10 billion euros in free cash flow in 2023.
So they have plenty of cash to cover those buybacks.
Okay, so that's another good sign.
It is, but we also need to consider the price they're paying for those shares.
Because if they're buying back shares at a high price, they might not be getting a good return on their investment.
Right, so we need to look at their valuation metrics, like their price-to-earnings ratio and their price-to-book ratio.
And what do those metrics tell us?
Well, they suggest that Stellantis is currently trading at a reasonable valuation.
Okay, so it seems like their buybacks are making sense from a financial perspective.
I'd say so, but again, we need to keep monitoring this situation.
Okay, so we've talked about dividends, we've talked about buybacks, and it seems like Stellantis is doing a good job of returning value to its shareholders.
They are They're striking a good balance between returning cash to shareholders and reinvesting in the business.
Yeah, they're not just trying to pump up their share price in the short term. They're also thinking about the long term.
Exactly. They're playing the long game.
Okay, so overall, I'd say Stellantis is in a pretty good position.
I agree they have a lot going for them.
They have a strong global presence. They're making smart moves in the EV space. They're streamlining their operations. They're returning value to shareholders.
Yeah, they're ticking a lot of the right boxes.
But as always, there are risks and challenges.
Absolutely. The automotive industry is a tough business, and anything can happen.
So investors need to be aware of those risks, and they need to do their own research before making any investment decisions.
Agreed. Never invest in something you don't understand.
Okay, so now that we've got a good understanding of Stellantis's financial position and their shareholder value creation strategies, let's shift gears and talk about some of the other factors that could impact their future.
Sounds good.
Let's talk about their growth strategies, the risks they face, and what investors should be watching for in the coming years. Okay, so we've talked about their financials, their strategy, their challenges, their opportunities, but let's zoom out a bit and look at the bigger picture.
Okay.
Stellantis, it's a global company, right?
Yeah.
Factories, customers all over the world.
Yeah, they're everywhere.
So what are their most important markets, and how are they approaching each region?
Well, their biggest market by far is North America.
Makes sense.
It's where they generate the most revenue and profit, and they have some really strong brands there. Jeep, Ram, Dodge, Chrysler, you know.
Those are some iconic American names.
They are, and they've been really successful there. But as we discussed earlier, North America is also a market that's rapidly shifting towards electric vehicles.
Yeah, there's a big challenge for them.
It is, but they're taking it seriously. They're investing heavily in electrifying those iconic brands.
Like how?
Well, we've already seen the Jeep Wrangler 4xE plug-in hybrid, which has been a huge hit.
Yeah, I've heard good things about that one.
And they're also launching a whole bunch of new EVs across their brands, including the Ram 1500 REV, their first all-electric pickup truck.
That's going to be a big one.
It is. The pickup truck market is huge in North America, so if they can nail that with an electric truck, they'll be in a really good position.
So they're electrifying their American icons, but what about their strategy in other parts of the world?
Well, Europe is another key market for them.
Yeah, makes sense.
They have a wide range of brands that are popular there: Peugeot, Citroën, Opel, Fiat, Alfa Romeo, you name it.
And they're really pushing EVs in Europe, right?
They've set a goal of 100% electric passenger car sales in Europe by 2030.
Wow, that's aggressive.
It is, but they're already making good progress. They're launching tons of new EV models, and they're benefiting from strong government support for EVs in Europe.
Okay, so Europe is a bright spot for them. What about other regions like South America and Asia?
Well, South America is a strategically important market for them, especially Brazil.
Yeah, they've been there for a long time.
They have, and they have a strong market share. They're focusing on offering a mix of affordable vehicles and more aspirational models to appeal to a broad range of customers.
And what about Asia?
Asia is obviously a huge market with enormous growth potential, but it's also incredibly complex and competitive.
Yeah, we talked about their challenges in China.
Right. China is tough,
Hmm.
but they're taking a cautious approach. They're learning the market. They're partnering with local companies. They're not trying to do too much too soon.
And what about India?
India is another massive market with a booming middle class and a growing demand for cars.
Yeah, it's a really exciting market.
It is, and Stellantis is focusing on expanding their presence there with Jeep and Citroën. They're also emphasizing local production to make their vehicles more affordable for Indian consumers.
Okay, so it sounds like they're really taking a tailored approach to each region.
They have to. They recognize that one size doesn't fit all in the global automotive market.
Makes sense. So we've talked about their global strategy, their regional approach, their challenges, their opportunities. Now let's step back and consider what makes them well-positioned to succeed in this rapidly changing industry.
Okay.
I mean, what are their strengths? What are their advantages?
Well, one of their biggest strengths is their sheer size and scale. They're one of the largest automakers in the world, which gives them a lot of bargaining power with suppliers and access to global markets.
Yeah, they're a behemoth.
They are, and they also have a really diverse portfolio of brands, which allows them to appeal to a wide range of customers across different segments and regions.
And they have a long history of innovation, right?
They do. They've been at the forefront of a lot of important automotive technologies, from fuel efficiency to safety features to electric vehicles.
Okay, so size, scale, brands, innovation, those are all good things.
Yeah.
But it's not just about having those things right. It's about using them effectively.
Exactly. Execution is key.
Can they actually deliver on their plans? Can they adapt to this rapidly changing market?
That's the million-dollar question. And the answer depends on a number of factors: their leadership, their organizational structure, their corporate culture, their ability to attract and retain top talent.
Yeah, it's not going to be easy.
It's going to be a tough road ahead.
Yeah.
But they have the potential to be a leader in the future of mobility.
Okay, so let's wrap things up. What are your final thoughts on Stellantis? What should investors be thinking about?
Well, I think Stellantis is a really interesting company. They're at a crossroads. They're trying to balance the demands of today's market while also preparing for the future.
Yeah, they're walking a tightrope.
They are, and it's going to be a fascinating journey to watch. They have a lot of potential, but they also face a lot of challenges.
So what should investors be watching for?
Well, they should keep an eye on their progress in the EV market. Are they hitting their sales targets? Are they launching compelling new models? Are they bringing down the cost of EVs?
Makes sense. What else?
They should also watch their financial performance. Are they maintaining healthy margins? Are they generating strong cash flow? Are those dividend payments sustainable?
Well, good points. Anything else?
Yeah, they should pay attention to the competitive landscape.
Yeah.
How are they stacking up against their rivals, both the traditional automakers and the new EV startups? Are they able to differentiate themselves? Are they innovating?
Okay, so EV progress, financial performance, competitive landscape. Those are all important things to watch.
They are. And they should also keep an eye on the regulatory environment, because that can have a big impact on the automotive industry.
Yeah, those emissions regulations are getting tougher all the time.
They are, and that's adding a lot of cost and complexity to the business.
So investors need to be aware of all those factors before they make any decisions.
Exactly. Do your research, understand the company, understand the industry, and then make an informed decision.
Great advice. Well, I think we've covered just about everything there is to know about Stellantis. We've looked at their financials, their strategy, their challenges, their opportunities, their global footprint, their regional approach, their strengths, their weaknesses.
We've left no stone unturned.
Exactly. So hopefully our listeners feel like they have a much better understanding of this company and what the future might hold for them.
That's the goal.
And as always, you can find links to the full annual report and other resources in the show notes.
Yeah, check those out.
All right, that's it for this episode of The Deep Dive. Thanks for joining us.
Thanks for having me.
And we'll see you next time for another deep dive into the world of business.